remuneration committees, that you have an idea more or less what they are talking about. Your audit reports, the different types of audit reports, and so on. But let's go back to question number 1 quickly, your income statement and your balance sheet. At this stage, we have about, I think, 3 different ways of asking the income statement. If I look at last year's final paper, it was a full income statement and a full balance sheet, and the information you used in the income statement, your adjustments, had to be taken over to the balance sheet. So you must know your formats of your balance sheet to know which accounts or the accounts adjustments must then also go to your balance sheet, right? Like your accrued income, your accrued expenses, your prepaid income, your prepaid expenses, your income received in advance, right? So you must know that. Then there's another way of asking it where we can ask the full income statement and just a part of the balance sheet. Normally the equity and liability section of the balance sheet, right? And then there's another way where we can ask the full balance sheet and only the projected or the corrected net profit that you have to answer. I know we normally struggle with those ones, but practice all these options so that you are not surprised on Friday. Because unfortunately for you, you'll see that paper before I see the paper. So I cannot even tell you which way to go on it. The best we can do is to practice all our different options so that we are not surprised at the end of the day. Question number 2 deals with the cash flow statement. If you know your format of your financial statements, your income statement, your balance sheet, and your cash flow statement, then things will be much easier. There's at least 30% in that paper that you should get from just knowing your format. So I really want to encourage you to study your formats of income statement, balance sheet, cash flow statement, any statement, your production cost statement, study your formats, and that will make life a little bit easier. I always say your format is your map in this accounting jungle of ours. It gets you out of that mess that you are in. But if you're not studying your format, you're not doing yourself a favor. Some time ago, I asked learners, what's the difference between a current asset and a non-current asset? You need to know that your current assets are basically your short-term assets within less than 12 months they will be converted into cash. Your non-current assets is your long-term assets. In more than 12 months, they will be converted into cash. Why is that information so important? It's important because that's basically what the balance sheet is based on. The same with your cash flow statement. And this afternoon, we're going to focus a lot on cash flow and your financial indicators. So if you know your cash flow statement, the format of it, then you know which amounts do you need where, and that will already get you a 30%. And I really hope you're going to listen and study your formats so that on Friday you are not surprised and you surprise us a little bit by knowing your formats and getting all those marks that really belongs to you. Okay. And then question number 3. Question number 3 deals with the financial indicators. Now, I quickly just want to stop and talk a little bit about your financial indicators. In your mind gap, you have what we call a tree. And your teacher might be able to give this tree to you. This is what the tree looks like. Let me just go down a little bit. This is basically what the tree looks like in the mind gap. Now, what's nice about this tree, it gives you the financial indicators, it groups them together, and then it's easy for you to talk about them. Look at this one. It says financial or risk or gearing. If you talk financial risk or gearing, there's only 2 ratios that you must quote there. The debt equity ratio and the return total capital employed. The ratio that they like to ask. They like to ask you this one. It's always in a paper. Discuss the risk, the gearing, or the loan of this business, right? So only 2 ratios. And when you answer on the ratios, the first thing you must quote is the name of the ratio. There lies your first mark already. Then the second thing you have to quote is your figures. To say that in 2022, it was 0.3 to 1, and then it increased to 0.6 to 1. That is another mark for you, right? And what is that? We're talking here about financial risk or gearing, right? Gearing is your relationship between your own and borrowed capital, right? Okay. Then another favorite one that they last like to ask is your liquidity. What is liquidity? It's the ability of the business to repay their short-term debts. We have about 6 ratios that we have to know for liquidity. So if the word liquidity comes up, those 6 ratios must already pop into your head. Your current ratio, your asset test ratio, your um, debtors collection, your creditors period, your two stock ratios, your stock turnover, and your stock holding period, right? So liquidity, ability of the business to repay their short-term debts. Then we have solvency on this side. What is solvency? The ability of the business to repay all their debts or their long-term liabilities. So we say all the debts here. Remember that word, all the debts. We have a solvency ratio that says current total assets to total liabilities. Study those ratios, right? Then you have your shareholders earnings. So when we talk about shares, these are the ratios that you have to quote here. We'll talk a bit more about it when we do the question on analysis and interpretation, right? Return on average shareholders equity, earnings per share, dividends per share, and your net asset value. Okay. These are your profitability ratios. The name tells you exactly what you are testing here. It's telling us about the operating efficiency of the business. These are not so popular, but they could be asked. The formula sheet can actually help you here with, but the formula sheet can't help you with the rest of these ratios. You must study these formulas of the ratios. You can't rely on that formula sheet because it's not helping you. Also in the mind the gap, they give you nicely a breakdown here. They give the name of the ratio, they say how it's calculated, and they give you the answer as a percentage and so on. Because sometimes they could say to you, they want the answer, a ratio, the answer must always be X to 1, right? You can't give ratio as a percentage. If you look at stock turnover rate, there it is. It must be the number of times per year. So you can't put a rand sign, a percentage, or anything there if it must be times per year, or you just give it without any signs there or any denominations there. Okay, so study your financial indicators for Friday. I counted in a question paper, almost 50 of the marks, or say, let's be safe, 40, between 40 and 50 marks goes to your financial indicators, right? So if you can study your financial indicators on Friday, you are guaranteed 40 to 50 marks if you know your financial indicators. Because in question number 2, there's about 15 marks on the calculation of the financial indicator. Question number 3 is about 35 marks or so on the analysis and interpretation of those ratios. And in question number 3, they actually give you the ratios, but we struggle with that question. We don't answer it well because we don't know our financial indicators. We don't know which one goes where. That's why I took some time this afternoon to just go over to it. A third of our paper is on financial indicators. So study your financial indicator, know exactly what it's testing, because if you know liquidity is the ability of the business to repay the short-term debts, when you answer the question, you know what you are looking at. If your liquidity, current assets to current liabilities. So if it's 2 to 1, for every 2 rands that I owe, I have 1 rand that I have to repay. So am I in a good position? Yes, because I can repay my debts. Okay. I think that was quite a mouthful. Let's look at the question. We send questions to you and then we ask you to work through the questions for us. And now I'm going to work through those questions to help you a little bit, right? Okay, let's get started. Our first question then is question number 1. Okay. Question number 1, cash flow statement and financial indicators for 40 marks and 30 minutes. If a question gives you 30 minutes, please try to stick to your 30 minutes so that you can really, just want to bring it closer, so that you can really make sure that you get through the whole paper. Because often kids
Thank you.
complain. Yes, ma'am? Their question? Okay. Often kids complain about the time of a paper, but you don't take note of the time that's allocated. Try and stick to the allocated time. Okay. Choose the correct word from the list below which best suits each statement below. Write only the words that match the statement. Use conjunctions and prepositions to explain the statement.
Ma'am, we can't hear you. Yeah.
Ma'am, we still can't hear you. May Andrews, check your mic, please. Leonera, check your mic. Colleagues, in the meantime, while May Andrews is checking for a mic, from my side, thanks a lot for everyone who come in and attend our webinar. And please make sure that I will make sure the subject advisors will put the attendance register on. You will see the grade 12 English one is easy. You can just say what's the school and what's the name of the teacher and the number of the learners who is in this in this webinar now. And then afterwards, we will send tomorrow the link for paper 2 to check it Saturday from 9 to 12 as well. May Andrews, thanks for you for doing it for us, and I hand it back to you. Are you unmuted? Are you ready to go?
I'm ready, Mr. Fashia. Can you hear
Thank
me?
you. Yes, I
Okay.
can hear loud and clear. I see there's quickly a hand of Marais. Can we quickly do it, or can we do it after the first question was done? Sanet?
Can quickly ask.
Right, colleagues, thanks for May Andrews, and I hand it back. Please,
Sorry,
yes.
I just wanted to say we could not hear. That's all.
Okay, you are fine
Yeah.
now.
Are we fine
Yes,
now?
we're fine. Thank you. Thank you.
Thank you,
Okay.
everyone, and just please remember to fill in the attendance for me. That is very important for me to say from which school and what's your number of learners, because the previous webinar is 1.5 thousand intent, and I hope we are more than that today. Thank you, Mayor Andrews, and I leave you now. I will going on with the subject advisors. As all the districts that received the attendance register for this paper. Is there a district who has not received it, that I can make sure that you receive it? Okay, seemingly everyone have received. Thank you, Mayor and Andrews. I hand over to you and I go out of the meeting. Thank you.
Mr. Fashia,
Mayor Andrews?
I think we have, can you just send to Mateo because I see James have put the grade 12 accounting, but I don't see us receiving uh
The
the,
English one. Okay,
the
I
English
will
one
put on all, the groups for you now.
for Mateo, please,
Yes,
please.
thank you, ma'am.
Thank you.
Thank you.
Thank you, learners and teachers. I hope we are now clear and we can hear each other. I'm going to start again with question number 1, cash flow statement and financial indicators. Choose the correct word from the list below which best suit each statement below. Write only the word next to the question number in the answer book. The words are liquidity, gearing, profitability, and solvency. It will help you to know the meaning of these words so that it's easy to answer these short little questions. The use of borrowed capital or loans to finance the business, that is gearing. The ability of a business to pay short-term debts, that is liquidity. The ability of the business to pay all its debts, that is solvency, right? So number 1, gearing, number 2, liquidity, and number 3, solvency. Okay. I'm not going to show my question paper at all times. You must follow with me on your question paper. Okay, if I have something to show you, I will then go back to my question paper. Let's read quickly what is required. The information relates to the financial year ended 30 April 2023. Very important that we note our financial year, 30 April 2023. Complete the ordinary share capital note. Calculate the following amounts for the cash flow statement: income tax paid, dividends paid. Complete the following sections of the cash flow statement: cash effects from investing activities, net change in cash and cash equivalents. 1.2.4, calculate the following financial indicators on 30 April 2023: asset test ratio, percentage return on average shareholders' equity, and interim dividends per share. So the first one that we're going to answer, okay, it says, note, some amounts have been entered in the answer book, right? So the first one that we need to answer is our ordinary share capital note. Here's my ordinary share capital note. The first thing I need my shares in issue at the beginning of the year, right? Then 300 shares were issued, shares issued during the year. So I need this figure to get the amount that the shares were issued for in order to get this figure here. Here I will have my repurchase shares. So I'm already doing my format of my note so that I know what I'm looking for. And this amount will also be in brackets here, right? So let's find all that information. In information A, I have my sales, depreciation, interest expense, net profit after tax. There's nothing there that I need at the moment there. Then information B, I have my fixed asset, financial assets, inventories. I'm looking for shareholders' equity. There is my ordinary share capital. Can you see it? Here's my ordinary share capital. So there's the opening balance, 4,704,000, and there is my closing balance, 5,852,000. Those two amounts have been printed for me there. You see, there's 4,704,000, and there is 5,852,000. So there's nothing that I have to do with those two now. There's nothing else in B that I need. C deals with fixed assets, and D deals with my shares. Share capital and dividends. The authorized share capital consists of 2.1 million shares.
Hello, ma'am.
Yes, sir.
Yes, I can't see you, ma'am, by the screen.
No, it's fine. You're not supposed to see me now. Do you see my question paper?
No, nothing, ma'am.
Nothing.
Yes.
Is that for everybody?
Yes, say yes.
No,
Not everybody in your class, sir. Just check on your side what's wrong.
Ma'am, we can see it.
Can you see? Thank you. The school where you can't see, please check for me what's wrong. Okay, you mustn't see me now. You must only see the question paper. If I want to say something, I will appear again. All right. On the 1st of May, 70% of the authorized shares were in issue. Now, what is 70% of this 2.1? Calculate for me quickly. 2.1 times 70%. It gives me 1,470,000, right? 1,470,000. They said to me 70% of the shares were in issue. So this answer here is 1,470,000. Can you see that? Where did I get it? It's 70% of the 2,100,000, right? This answer is 2.1 times 70% gave me that answer, right? That is the shares I had in issue at the beginning of the year. Okay, let's read further. On 30 June, 300,000 additional shares were issued. You see, we are not given the price of those shares, right? And then on 30 September 2022, an interim dividend was paid of 318,600. We don't need that amount right now. Then, last bullet, 230,000 shares were repurchased on the 31st of January 2023. So that 230,000 shares goes in here. So what can I do with that information now? I can add up my shares here to see what is my total of number of shares in issue at the end of the year. I'm giving you 1 minute. Quickly add up for me. Add and subtract for me.
Ma'am, we can't hear you.
I said, take your 1,470,000 plus 300,000 minus 230,000.
1,540,000.
Okay, thank you. 300,000 plus or minus 230,000 gives me 1,540,000. 154,000. Thank you to that school. Okay, now I have these two amounts missing. Here, I need the average price. I wish I could ask you a question. Then I would ask you, how do we calculate the average price? The average price can be calculated in two ways. Way number one, you take your shares at the beginning of the year plus the new issue and you divide your ordinary share capital by the number of shares. That will give you the average share price. Or you do the end, your final amount at the end of the year, which in this case is your 5,852,000. Divide by your 1,540,000. That will give you your average share price. And seeing that we have this amount missing and we have two amounts missing here, which means this will become a balancing figure for us, right? So let's do the calculation quickly. We take our 5,852,000 divided by 1540000, and your answer is 3.8. So what is the average price here? 3.80 rands. So now you can calculate your repurchase value, right? So 230,000, let's move up, 230,000 times 3.8 will then give you 874,000. Okay, can that school just mute who's talking with me, please? Remember, we must all be muted. Only time you talk is when you want to ask a question. Please. Okay, now we can get that missing figure, right? Help me quickly do your calculation on that side. So your 4,704,000 minus 874,000 minus this 5,852,000, and we'll get the answer here. Or you can work your way back up as well. And if you work your way back up, you do the opposite of whatever you are doing. So 4,704,000 minus 874 minus 5,852,123, and it gives me 2 million. and 22,000. Did you get it?
Yes.
Good. So that is then 6 marks in the bag for us. So what's important with this one, know your format and remember, you can get your average price by using these two figures. You add these two and divide it by these two, right? That will give you your average price. Or in this case, we didn't have those figures. Then we use our final figures at the end of the day, right? If here are two figures printed, then you already know that you can use those figures to get to your average price. Your average price changes after a new issue. That's why you can't just use the one at the beginning. You have to calculate the one with the new issue of shares, right? Okay, we okay with that one? Second part of the question, ask for income tax paid. Now I have a little formula that I write. If you using the ledger accounts, then continue with those ledger accounts. This is not a time for you to start with whole new things. But if you find this one easy or that's the way you are doing it, then that is also okay, right? Okay, so now you must help me to find, I'm looking for the opening balance of income tax. I'm doing income tax paid now. I'm looking for the opening balance. I'm looking for the total for the year of income tax, and I'm looking for the closing balance. The opening balance I can find on my balance sheet, and the closing balance I find on my balance sheet. The total for the year, I find it on my income statement. Remember to complete a cash flow statement. You need an income statement for this year, and you need a balance sheet for last year and a balance sheet for this year. So 2 balance sheets and 1 income statement. Help me to find all my figures. The first one I can find, it says net profit after tax is 637,630. Then it says here, note the income tax rate is 30%. So this one is net profit after tax. So what percentage is this one? 70%, right? Which one do you want? 30%. So divide by what you have. What do you have? 70%. What do you want? 30%. So let's do it. We take our 637, 630. We divide it by, 637, 630. We divide it by 70. We times it by 30. So 273,270 is then your income tax for the year. So I'm going to put it here. 273,270. And this one goes in brackets because you assume you paid this all of this money, right? To the tax man. Now I'm looking for the opening balance and the closing balance. B. Remember, SARS can be under your trade and other payables, and SARS can be under trade and other receivables, depending on the situation. Or SARS can have a debit balance, or SARS can have a credit balance. You work with the information given to you. Looking for my SARS. There I see my SARS. Okay. So 2022 was the opening, 2023 is my closing balances, right? Now I see I had a credit balance. What does that mean? Credit means I owe that money to SARS, right? So I opened this year with a credit balance of 36,600. And I put a bracket because when am I going to pay that? In this particular year. So I'm putting a bracket around it. Then I'm looking for 2023 balance. You see there it is. It now says 21,270. It says a debit balance. What does a debit balance mean? It means in this particular year, 21270, I paid SARS too much. Now SARS owes me money. Can you see that? Okay, so now help me add up. Yeah, everything must be added because everything is with a bracket. Can you see that? So 273,270 plus 36,600 plus 21,270. It gives us 331,140. Okay, as your final answer. So remember here, I need my opening balance. I need my total for the year. I need my closing balance. Where do you get your opening and closing balance? From the balance sheet. This is 2022. This is 2023. Where do you get this one? From the income statement. In this particular case, I had to calculate it. What did I use to calculate it? I said my 637, 630, divide by 70, and I said times 30, right? Divide by what you have times what you want. Okay, madam? I ask again that you mute your mic and not talk out of turn. And then please make sure that you sign the registers as requested. Okay, that was dividends
Good day.
paid. Dividends paid, I use the exact same formula. And dividends paid is a bit easier because it always stays the same for you, right? I need my opening balance, I need my total for the year, and I need my closing balance. This is one way that you can calculate it, and I'll also show you another way to calculate it, right? So help me find my opening balance and my total dividends for the year. Okay. Where do I find my opening and closing balances? Shareholders for dividends. Shareholders for dividends in the balance sheet under your liabilities, the opening balance or your 2022 shareholders for dividends is your opening balance for this calculation. I see I don't have a closing balance, but normally we have a closing balance here, right? In this particular exercise, I don't have one, but there must be one because I would have declared that I'm going to pay my shareholders. And shareholders for dividends is under your liabilities because at the end of the year, you say you're going to pay them, but you only pay them in the next year. So once you declare, you're creating the liability in your business, right? So let's see what more information I can get. Earlier I read that on the 30th of September, 13,600, right? So I said to you, I need my total opening balance. In this case, let's find the opening balance was 265,000. We know this 265,000 will be paid, right? So this will be paid to over to the shareholders, right? I don't see a balance here.
Ma'am, we can't hear you again.
Is it better?
Yes, ma'am.
Thank you, dear. Okay. Your opening balance from the previous year, remember, was a liability. So you're going to pay that one. Your interim dividend for the year, it's always paid because it was declared in the year and paid during the year. So these two amounts were paid for your dividends. So you add those two amounts and then that will be your dividend paid for the year. So always remember your opening balance and your interim dividend, those are the two amounts that was paid. So 265,000 plus 318,600 gives me 583,600. Okay, I hope you are with me so far. Keep your questions. We'll ask the questions at the end, right? Okay, now we're going to cash effects from investing activities. When I calculate my purchase or proceeds from the sale of fixed assets, I have a formula that I use. I use the opening balance.
Sorry, ma'am.
Yes.
Yes, can you please emphasize that the dividends paid and tax paid, they must be in brackets? I saw now you did not include the amount in brackets. The
Yes, madam.
dividends paid. Yes.
You are absolutely correct. Let me fix that for you. 31,140, because I can remember in a June exam, it was said if these two amounts are not in brackets, then you will not get the
Get
marks.
the marks, yes.
Learners would get, let's say, out of the 4, the answer is right. You will only get 4 because of the bracket not being there. Remember, these are amounts paid. So they must be in brackets, and they are shown in brackets on the cash flow statement. So remember, that's very important. Thank you very much, ma'am, for that. Okay, can we carry on? So I'm busy calculating my fixed assets bought or my fixed asset disposed of. So you're taking your, remember, this is your fixed assets. On the balance sheet, you have what we call the carry value, right? So you have the opening balance for your carry value, you have your depreciation, you have your disposals, and you have your additions, right? Disposals at book value. Remember, if asset disposal is in the income statement, it will always be at the profit or loss. But if asset disposal is in the cash flow statement, it's always at your book value. Additions at cost, and then your closing bank balance, your closing balance of your fixed asset or your closing carry value, right?
Sorry, ma'am.
Yes,
Can you
sir.
start afresh? Can you start
Okay.
afresh? Yes.
I said we are busy with cash effects from investing activities, right? So we want to calculate the fixed asset purchase or the fixed asset sold, or, right?
Yes.
Disposed of. And I always use this formula. This formula can either give you the disposal or the addition at cost, right? So what you need your opening balance or your carry value in your balance sheet of your fixed asset. On the face of the balance sheet, we show the carry value of your assets, right? This is your 2022 balance. And then we want depreciation, which we're going to subtract there. Then disposal will also be subtracted and additions will be added, and it must then give you your closing balance of your fixed assets at the end of the year, or your 2023 balance, right? So I'm going to find all this information, and you must help me to find all this information so that we can calculate our missing figure, right? Normally, there'll only be one missing figure. Let's see what they gave us on the fixed assets. What are we looking for? Okay. There's nothing that I need there. Here is my fixed assets. Can you see carry value? 2023, 3.8 million and 3,830,000. And your closing is 4,094,900. Let's use those two figures quickly. So my opening is 3,830,000. And my closing is 4,094,000, right? 900. All right. Okay, then there's nothing more. Then C, I have more information. Extensions to land and buildings were completed during the year at a cost of 830,400. What is that? That 830,400 is already my purchase of my fixed assets. Can you see that? So that is already 830,400. It was given to me. So I did not have to calculate. And I bought these fixed assets, so I must put it in brackets, right? So I'm going to put it also on my calculation, 830,400. Okay. And that's an addition, so it's not in brackets here. Okay. Then it says, bullet number 2, equipment was sold during the year at carry value. No further information. Can you see that? Which means I have to calculate the equipment that was sold. That is in my missing figure, right? Also, I need depreciation. Depreciation, 413,000. Let's put depreciation in 413,000. Now, the only amount that's missing is this disposal. Can you help me to calculate this disposal? Take your 3,830,000 minus your 413,000 plus your 830,400 and minus your 4,094,900. 3,830,000 minus 413,000 plus your 830,400 minus your 4,094,900. We also do it with you. 3,830,000 minus 413,000 plus 830,400 minus 4,094,900. And your answer is 152,500. That answer will then go to the proceeds from the sale of your fixed assets. Can you see how easy it is? And this money came in, so there's no bracket for that one, right? You can also work your way up on this calculation, but then remember, if you work your way up, you do the opposite of everything that's happening here. So you say 4,094,900 minus 830,400 plus 413,000 and then minus that one as well, right? So you're doing the opposite of what I have. Okay, so in brackets, I can then write 3,830,000 minus 413,000 plus 830,400 minus 4,094,900. Or you turn the signs around and you start with this 4 million and you turn everything around and you end with this one, right? You can also do it and it should give you the exact same answer. Now we have to just get our final answer. Our 830,400 is in brackets. So, and your 152,500, no bracket, and your 190,000, no bracket. So I can see my 830,000 is more. So my answer will be in brackets, right? So I minus 152,500 and minus 190,000. And it gives me 487,900. Okay. Okay. Now we go to your net change in cash and cash equivalents. You have your cash balance at the beginning of the year, which means that's your 2022. And then you have your cash balance at the end of the year, which means that's your 2023. Let's find all our information quickly. Remember, when you're looking for cash and cash equivalents, you must always look for the bank overdraft. You look for it at the beginning, you look for it at the end. Let's see. 2022, there is my cash and cash equivalents. Okay, and then I said, what else must I always look for? Bank overdraft. Here's my bank overdraft. Okay, so I can see at the beginning of the year, I had a cash and cash equivalent of 6,500, which is a positive amount, and I had my bank overdraft of 38,400. That 38,400 is more than my 6,500, so I already know my answer is going to be in a bracket there. So 6,500 minus 38,400. Okay. I don't like funny calculations like this one. 38,400 minus 6,500 gives us 31,900. If you do it 6,500 minus 38,400, you just get it in a bracket, right? Or a minus sign in front of it. And some of you like to do it like that because then you can see it's supposed to be in a bracket, right? I'm still old-fashioned. I want the big one in front and one at the back, right? Okay. Then we have cash balance at the end of the year. Let's find our figures at the end of the year. We have cash and cash equivalents, 56,600. And I don't see an overdraft, so we have 0 there. So there's nothing to subtract. Remember what I said? You must always look for the overdraft. Okay. Now, if I have a negative and a positive, I must add these two to get this figure above, right? Okay, let's do that. So if I have opposites, I add 31,900 plus 56,600.
Kgotso.
Okay. So I said if we have opposites, a negative and a positive, we add the two together to get 88,500. Now I've named this one A and I've named this one B and C so that I can explain to you. In this case, we have this scenario. B was negative. If B is negative and C is positive, then A must be positive, right? If B, another scenario, if B is positive, but C is negative, then A must be negative. So what does it tell you? These two, A and C, goes together. They must be the same. Okay. And if both of them are favorable, if there's a positive and a positive, you would subtract to get the answer for above, right? Okay, can you see that? Okay, I'm going to say that again. A negative and a positive, we add the two together to get the answer above. This A and C is linked with one another. If C is positive, then A must be positive. If C is negative, then A must be negative, right? If this was a positive and a positive, we have to subtract the two to get the answer for A. All right.
Mendus,
Yes, sir.
may the host please ask all the participants to switch off their videos because they are disturbing.
Who must switch it off?
Please, because most of the learners are switching on their cameras.
Dear learners, your fellow learner is asking you to switch off your cameras because I can't, unfortunately, I can't see you, but others can.
Ma'am, we cannot hear you, ma'am.
Okay. Learners, please switch off your cameras. Teachers, please assist with the cameras that we don't have cameras on. Okay, I'm carrying on. The next part of the question wants us to calculate the ratios, right? They ask us to do asset test ratio, percentage return on average shareholders, and interim dividends per share. Now, to make it a little bit easier, I wrote my formulas for my ratios here. Current assets to minus inventory to current liabilities, right? We also know if we say our current assets consist of 3 items, your inventories, your trade and other receivables, and your cash and cash equivalents. So if you don't have your inventories, you can just take your cash and cash equivalents and your trade and other receivables and add those two, and it will give you it will help you with your calculation for asset test ratio, right? Let's see what we are given for that. Right at the end, I see my current liabilities is 360,700. $360,700. 700. And then I'm looking for my current assets. Inventories, I see inventories, I see trade and other receivables, I see cash and cash equivalents. I don't see my current liabilities. So what can I do? I will use these two amounts, my trade and other receivables and my cash and cash equivalents to get to my calculation, right? So 240,000 plus 56,600. And remember, your answer must always be x to 1. Okay, please don't give us funny answers. 240,000 plus 56,600 gives us 296,600. Divide by 360,700. It gives me 0.821. Okay. The next one, once again, I wrote down my formula to make it a little bit easier so that you can see what I'm using. Net profit after tax is what I'm looking for, and average shareholders equity. That's what I'm looking for. Average, then I'll have to use the opening plus the closing and divide it by 2 or times it by half to get my answer here. So I'm going to find my net profit after tax, and it was given to me, right? Net profit after tax was given to me. There it is on your income statement. Net profit after tax. So I have 637,630. Okay, now I need my average shareholders. Here's my shareholders equity in information B. Shareholders equity. So I'm going to write 5,124,800 plus 6062. And I would times it by half or divide it by 2. Okay. Help me with the calculation. Don't forget times 100. Okay. I'm first going to do the bottom part of my calculation. 6,062,000 plus 5,124,800 divide by 2, right? It gives me 5,593,400. And then I can do my calculation. 637,630 divide by 5,593,400 times 100. And it gives me 11.399. Now help me here with the rounding off here. 11.399. It will be 11.4. Normally they say to you, round off to 1 decimal. Be careful not to round off too much. Just 1 decimal is fine, right? Okay, then your answer is 11.4. Next one and the last part of this question. Calculate. Okay. Interim dividends per share. Interim dividends. Remember, our interim dividend was given to us here in D. Bullet number 4. Interim dividend paid was 318,600. So I can start with that one, 318,600. And then I need the number of issued shares. You would remember earlier I was doing the ordinary share capital note. Do you still remember? It was the first thing that I did. No? So interim dividends. At this stage of interim dividends, I had my, let's show you. At this stage, on the 1st of May, I had 70% of those shares. And the 70% was 1,470, 1,470,000, right? On the 30th of June, we issued 300,000 additional shares. So how many shares do we have in issue now? 771, right? Then on 30 September, an interim dividend was paid. So how many shares do we have at 30 September, we have 1,770,000 shares. So if I want to calculate my interim dividend per share, then I'm going to take my 318,600 divide by my 1,770,000, and that will give me my dividend per share. Don't forget my times 100, right? So let's do that. 318,600 divide by 1,770, 1, 2, 3 times 100, and it gives me 18 cents.
Hello.
Yes, sir. Okay. So your answer then for your interim dividends, let's quickly finish it.
Sorry, ma'am.
Divide by 1,770 times 100, and it gives
Sorry,
me
ma'am.
18 cents. Okay,
So-
can I take some questions quickly on this one? Just 5 minutes or so.
Sorry, ma'am.
Yes, sir.
Can you please repeat how you got your interim dividends per share?
Okay. You see where I got my interim dividend, the 318,000.
No,
Can you see where I got the
no.
318,000? 318,000 was given here in number D. It was given to us, 318,600. The shares, I got this from my ordinary share capital note that we calculated in 1.2.1. In 1.2.1, we calculated, we said 2,100,000 times 70% gave us 1,470,000. We were
Okay.
told that new
No.
shares were issued for 300,000 on the 30th of June. So I took these two amounts and I added them, and I said my total shares in issue at this stage is 1,770,000.
Okay.
Right. And then the dividend was paid on the 30th of September. So at that
Yes.
stage, I had 1,770,000 shares in issue.
Okay.
Okay. So then I took my 318,600 that was given to me as the interim dividend, and I divided by 1,770,000 times 100, and that gave me 18 cents.
Okay. Now I see.
Thank you, son.
Thank you.
Mayor Vessels, I saw your hand was up.
Good afternoon, ma'am.
Good
I
afternoon,
just
ma'am.
I just want to know on the question paper on page 2, information number B,
Yes, madam.
source income tax, that is a debt that has a debit balance of 21270. Must we not add that to our current assets when we calculate the asset test ratio?
No, 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 no. No.
Oh, no. Sorry, we
Rem-
mustn't, because the tax have their own note. Sorry. Thank you, ma'am. I didn't think. Thank you very much.
Okay.
Thank
No,
you.
it's fine, ma'am.
Bye-bye.
Okay. Bye-bye. May Sanet? May Sanet? Mr.
No, I'm
Justin?
fine. That was when we could not hear you.
Okay, but you're fine now.
Okay. Yeah, thank you.
Justin? Miss your hand up. Mahotsi?
Yeah, boy.
Sorry, ma'am, can I just please talk to these learners? Can I just talk to these learners here? Bana ba sekolo, ke kopa le timeng di-camera tsa lona. You are playing, you are not focusing, and we see that. Especially the ones in black and white. You are playing. They are not even paying attention right now.
We're going to end up kicking you out of the meeting, and we would hate to do that. We want all of you to benefit, but when you don't listen, you're disturbing others. Okay, thank you, ma'am. Lapola, are you saying something? Okay, can we move on to the next question? Okay. Let's start with question number 2. Let us start with question number 2. Question number 2 is very similar to question number 1. Um, just a reminder to make sure that the registers are signed, and thank you very much for your attendance. We appreciate it. Learners, remember this is for your benefits. We don't want you to disturb others. Please work with us here to make this session as successful as we can possibly do. Okay, I'm going to take myself off again, and then we'll start with question number 2. Okay. Question number 2, cash flow statement and financial indicators. Once again, 45 marks, 35 minutes. Pay attention to your time, manage your time well. Teachers, if I can also advise you in class, when you are writing these activities, if it's 35 minutes, tell your learners, I'm giving you 35 minutes, be done in 35 minutes. Because what happens in class, we give them an hour, say, for one activity. They get used to working an hour on one activity. Then when the exam on Friday, they're not given an hour, then they struggle to finish. Our learners are way too slow. They take long to write. So if you can train them in class to focus on their time as well. I normally put my cell phone on and I say it's 35 minutes. If the cell phone goes off, then we must be done. Then we see how far we are, and you can gauge where they are in terms of their time management. But they are taking way too long to get through a question. The information relates Blade Marinate Limited. Information relates to the financial year ended 28 February 2023. Complete the note for cash generated from operations. 2.2, complete the cash flow statement for the year ended 28 February 2023. Some amounts are provided in the answer book. Calculate the following financial indicators for the year ended 28 February 2023. Dividends per share, net asset value, and percentage return on total capital employed. So the first one we're going to do is the note for cash generated from operations. Let's see what is required on the answer book. The top part has been done for you. So they just want to test this part, the net change in working capital, your inventory, your debtors, your creditors, or your receivables and your payables. Okay, so we are looking for that information, and this information can be found in your balance sheet. So let's go to our balance sheet. Information A, we have our income statement amounts. There's our taxation, net profit before tax, interest expense, and depreciation. Remember what I said for cash flow, we need income statement for year 1, income statement, balance sheet for year 1, balance sheet for year 2. Now let's start with our inventories. There's my inventories. Okay. My 2022 year, my 2023 2. When I explain it, I always say year 1, year 2. What happened? Here my inventories was 838,700. Then it moved to 963,200. Now don't answer me, but if your inventory moved from that point to that point, what happened to inventories? It increased, right? So if it increased, money flowed out of your pockets, because then you go and buy. If you're at home and you're buying groceries, when you have little groceries in your cupboard and you take 1,000 rand and you go and buy more groceries, your 1,000 rand is gone, but your cupboard has a little bit more groceries in, right? For the prices today, not much groceries, but a little bit more groceries. So that's exactly what is happening here. You have year 1, you have year 2. So you have 838,700, and then you have 963,200. The first thing that you have to do is to calculate the difference. What is the difference between these two? 963,200 minus 838 18,700 and your difference is 124,500. Where did I get 18 now? Let me just do it again. 963,200 minus 868, sorry, 838,700. It gives us 124,500. You see, for a moment, I had an 18 there that I did not know where it came from. There's no way probably have a 82 zeros there, right? And sometimes in the exam, we don't understand how you guys can make silly mistakes like that. So make sure on the day that you're writing a test on Friday, did you have a proper calculator or did you know how the calculator works? Because I always say you guys have a fancy calculators, but then you make silly mistakes and you don't, we can't even, the figures above is right. Like my two figures were right now, but somehow I got a 18. I think it's a previous calculation that I did not erase on my calculator, right? But the point is, I could see that I'm not supposed to have a 18 because there's two zeros, two zeros. There's no way I can have a 18 at the end of the day. But you guys don't look at it and you just write that calculator on that answer that you see on your calculator. Look at the answer and see how reasonable is that answer. Can you have, let's say you have 838,000 for sales, but now your cost of sales is 2 million. Is that even possible? It's not possible. So make sure that you know how to operate your calculator and that you look at the reasonableness of your answer to see if that can be, to just take a minute again and recalculate and you'll see you get a different answer, right? And you'll get the marks for that question. Okay, so here our difference is 124,000. Let's write it in 124,500. And I said this one must be in brackets because now there's an increase, right? Increase in inventories, right? And your calculation would then be 963,200 minus 838. 700. Remember, an increase in inventory must be in brackets because how did you increase the inventory? You bought more inventory. So your money left the business, right? If there's now a decrease in inventory, it would mean money came into the business because where's that inventory? It was sold and what came back? Money. Okay. Now let's look for debtors quickly. Debtors control. There we have debtors control. And remember with debtors control, it's not always given to you as debtors control. If it's under trade and other receivables, you must look for other things. Like say, for example, this 9,000 of SARS would lie, this 9,000. This 9,000 would lie under trade and other receivables. Then you must subtract it because you cannot use that SARS income tax amount because it will be shown on the face of the cash flow statement on its own. So you must not use amounts that will be shown on its own. Shareholders for dividends, can you use it as part of liabilities? No, because it will be shown on its own. Okay. Things that you can use is your prepaid expenses, your accrued income in general, right? But you must be careful. SARS income tax will be shown on its own. Shareholders for dividends will be shown on its own. So you cannot show it here as part of your operating activities. Okay, because it goes on its own. Otherwise, you will be duplicating your information. All right. So I don't see anything else for my debtors control. So I'm just going to use my 1.3 and my 1,452,000. Then I ask you again the same question. What was it for year one and what was it for year two? Year one, it was 1,300,000. Year two, it was 1,452,000. What is the first thing that you have to do for me? Difference, right? Find the difference in those two. So 1,452 minus 1.3. What's my difference? 152. These are your debtors. Who are the debtors? They are the people who buys from us on credit, right? Now, there's an increase in debtors. Now my question to you, if there's an increase in debtors, is it bracket or no bracket? The debtors increase. It is bracket. You are correct. Why? Because let's look at debtors decreasing. If debtors decrease, it means they paid their accounts and we received money. But in this case, my debtors increase, which means the debtors bought more goods. Now let's look at the goods quickly. Let's say we're selling clothes. We are, let's say, Truworths. Truworths needs to buy that goods. What do they use to buy that goods? They use their working capital. Now, when you as a customer or a debtor buy the goods and you don't pay for it now, you'll only pay for it later. What's happening with that clothes? It leaves the store. And with that clothes is the money that we've already paid, right? So that's why in this case, the debtors increased, which means they bought more on credit, right? So where's that money? It is gone with the debtor. Who had to pay for the clothes in the meantime? We did. What did we use for it? Working capital. So there's a decrease in our working capital, right? Money didn't come in. If the situation was changed and our debtors now decreased, it means they paid us and money came into our business. So you're absolutely correct to say that 152,000, the 152,000 must go in brackets because it's an increase in my debtors. Okay. Let's find the creditors quickly. Remember what I said, your creditors control. Creditors control 624,000, 696,000. Once again, year 1, year 2. And then I said to you, my creditors, accrued expense and income received in advance must go to my creditors, right? I said my debtors, your prepaid expenses and your accrued income must go there. So there I see accrued expenses. So it must then be added as part of my creditors. I'm not taking SARS income tax. Why? It will be shown on the face of the cash flow statement. I'm not taking shareholders for dividends because it will be shown on the face of the cash flow statement. I know this forms part of my trade and other payables, but I'm not taking it. I know this one forms part of trade and other payables, but I'm not taking it because it will be shown on the face of the cash flow statement. So help me to add these two amounts. Add 624,000 plus 21 for me. And then you add 696,000 for me and 19,500 for me. Just going to do it on a page. So once again, you have year 1, year 2, and then I have 624,000 plus 21,000. And on this side, I have 696,000 plus 19,500. And you've added on your side 624,000 plus 21,000 is a 645,000. And then on this side, I have 696,000 plus 19,500. It gives me 715,500. And what is the first thing that you have to do for me? Difference between the two, right? So 715,500 minus 645,000, it gives me 70,500. Now let's see what's happening here. This is my creditors. In year 1, my creditors was 645,000. Now the creditors are 715,500. What is this? An increase. So my question would be bracket or no bracket. So the answer would be no bracket, right? Let's write it and then we talk why it's no bracket. 70,500 and then that is your 645,000 minus 715,500, right? Don't forget where we got these amounts, 724 plus 21,000 plus, I'm going to write the other one at the bottom, 696,000 plus 19,500, right? You can write it on top because you have enough space, or you just make sure you write both of them so that you know where we're getting all these figures from, right? Okay, there's an increase in creditors. Let's focus on decrease first. Creditors are the people we owe money to. If we pay our creditors, our bill or our payments or our outstanding debts to the creditor will reduce, right? So we will owe them less. But if there's an increase in creditors, it means the working capital in the business increase. Let's go again to to your Truworths, your store. If Truworths buys goods on credit from another supplier, what happens to those goods? It comes into the business. It increases our working capital, which means we have more stock that we can sell to our debtors, right? So that's why you see that the increase in creditors adds an increase in your working capital. The one that I want to focus on here, creditors, that's easy for you to understand, is a decrease in creditors. When creditors decrease, why did they decrease? Because we paid. We paid our debts, which means there's less money that we owe to our creditors. So a decrease in creditors show that we paid, which means a decrease in creditors will be an outflow of cash. I always say focus on the one that's easy for you to remember, right? So here, creditors, I want you to focus on the decrease because we pay them, then decrease must be in brackets. Then it's obvious increase must be no brackets. The same with your debtors. If a debtors decrease, it means it's an outflow of cash because the debtors decrease, it means it's an inflow of cash because the debtors paid us and money came into the business. So the increase is then obvious, it must be brackets, right? The same with your inventories. If your inventories increase, it means it's an outflow of cash because more stock was bought. Focus on that one, then it will be easy for you to remember. It can either be bracket or no bracket, right? So try and remember the one that makes more sense for you. Okay. Then we can add and subtract to get our final answer. So 124,500 plus 152,000 minus 70,500 because it's opposite gives me 206,000 and it must be in a bracket because these two amounts that's bigger than the 70 is in a bracket, right? Okay, then we're going to say 1,891,000, this amount, 500 minus 206,000 and it will give you 1,685,500 as your final answer. Okay, so make sure you understand these parts. Learn this part of the note in case they don't give it to you like this, that you know your depreciation must be added, interest expense added back, net profit before taxation is given to you or you have to calculate it and then you do your final calculation and this can either be a positive amount or a negative amount depending on your outcome over here. And that is 8 marks in the bag for you. Okay. Now we're going to look at our cash flow statement. It's not often that we get a full cash flow statement, but in this case, we were given a full cash flow statement. Cash flow from operating activities. We can surely write that in as well. Cash generated from operations. Let's write it in. And that answer must go there. And remember, whatever your answer is here, you bring it down. Mine is now 1,685,500. You bring it down and you get what we call a method mark, right? Just for bringing that answer down, okay? Then your taxation. Remember what I said in the first activity? We're looking for the opening balance, we're looking for the total for the year, and we're looking for the closing for the year, right? So help me find all this information. Here I've written my text. I'm looking for opening, total, and closing. Opening and closing, where do I get it? On my balance sheet. Total, where do I get it? On my income statement. Let's find it quickly. Income statement. We have net profit before taxation, 186,000, right? Taxation. So what percentage is this one? 100%. Then they say taxation is 30% of net profit, right? So now I can say 1,586,000 times 30 divided by 100. No? Remember what I said, divide by what you have times what you want. It gives me 475,800. That is then my total tax for the year. 475,800. Where did I get that one? It's my 1,158,600 times 30%, right? Because we were given the net profit before taxation, right? And then I'm looking for the opening balance and closing balances. Help me find it. There I go. My opening is 34,000. Can you see that? And it's a credit balance. Once again, it's a liability, which means last year I owed SARS 34,000, and this year I'm going to pay that 34,000 to SARS, right? And remember, this total must always be in bracket, or the total must be in the bracket so that we know the full amount was supposed to have been paid, right? And then we say 34,000 at the beginning, and I'm going to put this one in brackets because it's a credit balance, and I'm going to pay this one also this year, right? And then SARS income tax for the end of the year is 9,000, and it's a debit balance, which means this year I paid SARS 9,000 too much, so that must also go in a bracket. If this amount was a credit amount, I would not put a bracket here because it means I owe SARS for the next financial year, right? Now I can add up all these amounts to get my tax amount. So 475,800, I already have it on my calculator, plus 34,000 plus 9,000. And it gives me 518,800. And all amounts are in brackets. So that one must also be in brackets. And I'm going to take it to my cash flow statement. 518,800. And you can see the interest in brackets, dividends in brackets, and taxation in brackets, right? And then in your bracket, remember if there's no note, show all your calculations in brackets, because if you get something wrong, then they're going to look at the brackets to give you the marks, right? At least you can get maybe 2 out of the 4 marks. But if you write nothing here and you just have a final wrong answer, we can't help you with that wrong answer if there's no note, okay? So remember to put your calculations in brackets. Okay. I'm adding everything. You can subtract them, all can be negatives, all can be positive, but the answer must still be the same. Okay, so you can say minus 34, minus 475,800, minus 9,000. They're all negative, so they still give you the same negative answer, right? Okay, make sure that you know that. The problem here with your text comes with this credit balance or this debit balance. So if you can remember, a debit at the end of the year means a bracket. A credit means no bracket. Beginning of the year, a debit would mean no bracket, and a credit would mean a bracket. Okay, just remember that. And you have your total for the year that must always be in brackets, right? Okay, there's your first part done. Let's add up our cash flow from operating activities. We have our 518 or our 1,685,500 is a positive answer, right? So we're going to say minus 91,500, this one. So this one is a positive, minus 91,500, minus 277,300, and minus the 518,800. And it gives us 797,900. Okay. Okay. Can we move on? Okay. Now we're going to do cash flow from investing activities. Fixed assets purchase. You remember earlier I said to you, our fixed asset purchase has a little formula that you need to study for Friday to make sure that you get these marks. And here I've written my formula, so you must just help me to complete my formula. I said fixed assets, your opening carry value minus your depreciation minus your disposal and additions, right? And then your closing carry value. The school where they're making so much noise, can you switch off your mics, please? Thank you. Okay. I said your fixed assets, your opening carry value minus your depreciation minus your disposal plus your additions, right? And here we on your answer sheet, we have the proceeds from the sale of fixed assets, which is already 860,000, right? So it was given to you there, so we can put that already in brackets there. Okay, let's find the rest of my information. Let's start with my opening. There's my fixed assets at carry value, 2,780,000, 2,981,000, right? Let's put those two figures in quickly. With every figure that you put in for yourself, you're already picking up a mark for yourself, 2780. Okay, and then your closing balance is 2981,000. Okay, and then we're looking for depreciation. Where can I find depreciation? Here in my income statement, there it is, 214,000, right? 214,000. Let's put it in 214. And now you can get your addition that you are missing, right? Do the calculation quickly for me to see. So you're going to take your 2,780,000 minus your 214,000. Bracket is just wrong there. Minus your 240,000 minus your 860,000. Minus your 2,981,000. Okay, I'm also going to do it. 2780,123 minus 214 minus 860 minus 2981000. And what is your answer? 1,275,000. That is in the fixed asset that was bought. So take that amount that you calculated and remember you bought this asset, so it must be in brackets. Take it to your cash flow statement. In brackets, you will have the calculation that we did there. So you will have 2,780,000 minus 214 minus 860 minus 2981000. You can also turn it around. Like I said, if you turn it around, you start with 2,981,000. You add your 860, you add this one and you subtract that one, then you will get the same answer, right? Remember, we bought these assets, so it must be in brackets. Let's get our final answer here. So 1,275,000 minus 860,000. It gives us 415,000, and in brackets, because this 1.2 million is in brackets, so your bigger amount is in brackets, right? Okay. Cash flows are very nice. Some of my nicest topics that I like is my cash flow statement. Once you understand your format of your cash flow statement, then it becomes really much easier. And you use these little tricks that we have, and you will not struggle with cash flow again. Okay, let's go on to financing activities. Proceeds of shares issued. Okay. Let's see what they give us on shares. We have ordinary share capital. There we have 6.4 million. There we have 7,395,000. Let's see what we have on this side. In additional information, they give you your shares and dividends, right? We must use that information now to calculate this. On the 1st of March, 800,000 shares were in issue. On 30 June, additional shares issued at 12 Rand per 50. So I'm going to circle that 12 Rand 50 per share. And on 1 January, 30,000 shares were repurchased at 36,000 above the average price. On 28 February, 870 shares were in issue. Now we must kind of construct a little ordinary share capital note here for us, right? Let's do it quickly. Ordinary share capital note. We're just going to do the share part, right? So at the beginning, we had 800,000 shares in issue. Né? Additional shares were issued. We don't know how many additional shares. Can you see that? And then they say 30,000 shares were repurchased. 30,000 bracket, and that gives you 870. Now, can you calculate for me what is this missing amount here? I said to you 800,000 shares were in issue, right? This is the the share part of the ordinary share capital that I'm doing here. So 800,000 shares were already in issue. Additional shares were issued, and I don't know the additional shares, and I need that number of additional shares so that I can give the shares in my cash flow statement, right? The money received for the shares. Now I need this number here. Then they said to me 30,000 shares were repurchased. So 30,000 in brackets, and then they said to me 870,000 shares were issued. I said to you, if you go up, you do the opposite. So you can take your 870 plus your 30,000 minus your 800,000. And then you get the answer. Let's do it together.
100,000.
Well done. 870,000 plus 30,000 minus 800,000. So the shares that were issued was 100,000, right? So now I can say my 100,000 times 12 rands and 50 cents. That's the money I got from the issue of the shares. Can you see that? Okay, let's write that on our thing. So it's 100,000 times 12 rands and 50. 100,000 times 12 rands and 50 cents, and it gives me 1,250,000. Right, and this is money that I got from the issue of shares, so no brackets for that one, right? And how did I get this 100,000? This 100,000, I took my 870, I plus my 30, I minus my 800,000, right? Or you can even go down and say 800 minus 30 minus 870, it will still get you your, or 800 minus 30 minus 870, it will still give you your same answer of 100,000, right? Okay, Now I want my shares repurchased, right? They said to me the shares repurchase was repurchased at 36,000 above the average price. Now this 36,000 would go to your retained income, right? But we need the average price for my ordinary share capital note. And besides the average price, for the cash flow statement, I need the full amount of the that was paid for the repurchase of the shares. So I need that 36,000 plus I need the average price amount, right? So help me to get my average price amount, right? Let's see. They said to us at the end of the year, we have 870. And I said to you earlier, you can use your 870 divide by the share capital at the end of the year to get your average price, or you can use your number of additional shares issued at the beginning of the year, the two added to also get your average price, right? Let's see what information we were given to see which one will be the best option for us. We're looking for ordinary share capital. There you have your ordinary share capital of 7,395,000. Do you think that would be a good option to use that one? Let's see. 7,395,000 divide by, we said 870,000 shares. And it gives us 8 rands and 50 cents. How many shares were issued? How many shares were repurchased? 30,000 shares. So that gives me 255,000. Let's just go back to it. So I used these shares and my share capital that was, let me just get it again, 73,7395,000, and I divided it by that 870, and it gave me 8 rands and 56, which is the average price. Once I have the average price, I can then times that average price by this 30,000 to get 255,000. 255,000. Don't forget about this one. I said we need this one. Why? Because in the cash flow statement, we need the full price that was paid for the shares, for the repurchase of the shares. Cash flow don't say like balance sheet split the two, ordinary share capital portion, retained income. No. Cash flow says how much did you pay for those repurchase of the shares? I want the full amount. So 255,000 plus 36,000 gives us 291,000 that must go to your cash flow statement. Let's take it there. 291. And remember, we bought these shares back. We repurchased them, so it must be in brackets. Okay. In your bracket, you have 255 plus 36,000. And it gives you that amount. And make sure you know how I got to that 255. Okay. Then the last part of this one is loan. Let's find my loan information. The loan is actually the easy part of this one. You look for your loan at the beginning, you look for your loan at the end, and you calculate the difference between the two. Here is my loan, 930,000. Here, loan above bank, 930,000. Then now it is more. I can already see what happened here, an inflow of cash. Why is it more? Because the money came back into the business. We took out another loan in this business. Calculate the difference between the two, 1.1 million minus 930,000, and my answer is 170,000 with no brackets. Why no bracket? Because money came into the business. All right, now help me add up and subtract here. 1,250,000 minus 291,000 plus 170,000. Let's do it. 1250 plus 291 plus, no, 1250 minus 291,000 plus 17,000. And it gives me 1 million positive, remember, because the positive amounts are more than the negative amounts. 1,129,000. Okay. Now, in this particular question, they did not give you the opening balance, closing balance of cash and cash equivalents. They only want this figure here. And if you are not, I'm always saying, if you are given all the information, then you do this part on its own. But here, clearly, we're not going to have all the information because they blanked off these two spaces, which means we can't go and write our own things on those two spaces. Are you clear on that? So what are we going to do? A, this is A, B, and C. So you take A minus this one plus this one. Will give you your answer here. Okay? 797 900 minus 415 plus 1129. It gives me 1,511,900. Okay, 1,511,900. Okay, that was your cash flow statement. Okay, then once again, look at this calculations. This is still part of question number 3. There's a 4 mark, a 6 mark, it's 13 marks. The previous question was 12 marks, 3 4-mark questions on financial indicators. Can you see the pattern of how the question goes? Financial indicators must be studied because, like I said, almost 50 marks in this paper will be on financial indicators. Few calculations here and then analysis and interpretation in question number 3. Okay. In this one, they ask us for dividends per share, net asset value, and percentage return on capital employed. You need to study those financial indicators. So for dividends per share, I need interim and final, right? Times 100. If the cents are already given to you, they say to you, interim was 10 cents and final was 2 cents, then you know your dividend per share for the year was 12 cents, right? So you have these two ways that you can calculate it. So I'm going to look for my information and see which one will best help me here. Okay. Shareholders for dividends, I see. I see something on dividends. There's 115,300 and there's shareholders for dividends 191,400. So this is the dividend I had for last year and this is the dividend for this particular year, right? So this dividend divided by the number of shares issued will give you your dividend per share, your final dividend per share, right? Let's see if we can find more information on this one. Okay. Here they say to us, interim dividends were paid on the 30th of September. Dividends paid, but there's no amounts there. Dividends paid as per the cash flow statement on 28 February. Amounted to that amount. Okay. Now, in the previous question, I said to you the opening plus the interim will give me the total amount that goes to cash flow, right? So if I have opening dividends plus interim gives me the cash flow amount. So here I have the cash flow amount of 277,300. Nah? And I need my opening amount. My opening amount was 115,300. Just find it. So my opening was 115,300. Is it possible to get this interim? Yes, because then I can say 277,300 minus 115,300. Let's do it quickly. So it's 277,300 minus 115,300, and it gives us 162,000, the interim dividends, right? Okay. There they say to you, a final dividend of 22 cents per share was declared. So now I have a 22 cents that was given to me, right? Now I would say go with that given amount because you run the risk of making mistakes if you have to calculate it yourself, right? We have this 162,000. Divide, here's our shares, right? That we calculated. Up to this point, you had 900,000 shares in issue. Sorry, yeah, 900,000 shares. So 162, the interim, divide by 900,000. So 162 divided by 900,000 gives us times 100 gives us 18 cents equals to 18 cents. Okay. So 18 cents was the interim dividend. 22 cents was the final dividend. So if you take your 18 plus your 22, we will get the answer of 46. Let me back up a little bit. Okay. Why am I splitting this one? I said to you there's two ways of calculating it. You take the interim and the final, right? And then you take the number of issued shares. But you can see there was a repurchase that's complicating things a little bit here. So then I would say let's go to the interim plus the final. And you saw me calculating interim to be 18 cents. The 22 cents was given. Always try and work with the given information because then it will be more accurate. So you get 40 cents as your dividend per share for this final year. Okay. You can split them and do like I did. The interim 162, your interim 162 divide by 900. And then your final could also be 191. Just look for the final. 191,400 divided by 870,000 shares. When were the shares issued? Repurchase on the 1st of January. Okay. Let's see that 191,400 divided by 870,000. That gives you your 22 cents. So there you get your 22 cents. So we have our 22, we have our interim, and that will give us 40 cents, right? But for this answer, your 18 plus your 22 to get you to 40 would have been enough, right? I just want to show you where to get your answers from. Okay. Then we have net asset value. The formula is your shareholders' equity over the number of issued shares, right? You see, it was a good idea for us to do these number of issued shares because we need them the whole time to do our calculations. Okay, so now I need shareholders' equity. Help me find my shareholders' equity. Ordinary share capital, shareholders' equity, 8,615,800 divide by the number of shares, which is currently 870,000, and then you do your calculation, right? So 8,615,800 divided by 870,000 times 100 gives us 990.3 cents. Okay. See, there's a 3, 2, 1. So I can round off to 3 cents, right? My calculator needs the sun. It's too dark in here. Okay. 990.3 cents, right? Then the last calculation on this one, net profit, I need percentage return on total capital employed, net profit before tax plus interest on loans over average shareholders equity plus average loans. I said average, you take the opening plus the closing divided by 2. Okay. So we help me find all these amounts. I need net profit before tax. There it is on my income statement. I have net profit before tax, right? Net profit before tax. I need interest on loans. There's our interest expense. So those are my first two amounts that we need. Let's write them down. Net profit before tax 1586000 plus 91500. Okay. Then I need average shareholders equity and I need average loans, right? Let's see where's that information. There is my average shareholders equity, opening and closing, divide by 2 or times half, right? There is my loan. Here's my loan. Okay. Let's write down all this information. Your average shareholders equity for 2023, we have 8615800 and then plus 738000, another zero missing, plus my loans 1.1, 1, 2, 3, plus 930, all added and divided by half. Oh, that's a mouthful. Let's add up everything. Okay, there it goes again. 8615800 plus 7380. Always do this long calculation before you finalize it to make sure that you get it right, and make sure that you work properly on your calculator. Those calculation skills needs a little bit help there. Plus 1.1 million plus 930,000. Okay, divide by 2. That gives us 9,012,900. Okay, the top you can also add, but it's just two figures. The top you can also add 158600 plus 91,500 divide by 9012900. Don't forget times your 100. And it gives you 18.6%. 18.6. 18.6%. That was quite a mouthful. Remember, with this calculation, you can also say ordinary share capital plus the loan, and then at the beginning of the year, and then ordinary share capital plus the loan at the end of the year, and then divide, but the answer will still be the same, right? I like to group mine together, then it's easier for me to understand it, right? Okay, that brings us to the end of question number 2. The second, yeah, question number 2. Don't forget to fill in the registers. And now I'll take some questions quickly before we go to the next question. Questions? Jessica Makwena? Okay, any questions? We okay so far?
Ma'am, we have a question here.
Yes, please.
Ma'am, they say you must not charge before.
You must not? Questions? Yes,
Hello,
dear.
ma'am.
Yes, I can hear.
How we got the 36,000 on the shares repurchased.
That 36,000 was given to us.
I cannot
Remember
see
here
it.
on page 4, look at this
Yes.
one. It says
Yes, ma'am.
1 January, 30,000 shares were repurchased at 36,000 above the average price. Remember, the average price is what we take to our ordinary share capital account,
Yes, ma'am.
right? And then the amount more than the average price goes to retained income. So this
Okay.
36,000 goes to retained income. And I say, when you do the ordinary share capital note, you only worry about average share price. And then when you do retained income note, you only worry about the amount above the average price, right?
Okay.
Let's say the shares were repurchased at 5 rand. Then 3 rand, say, is the average price, and 2 rand will go to retained income, right? We say the 2 rand is the amount more than the average price that we paid for the
Mhm.
shares. We paid 5 rand for them. But 3 rand is average price, goes to ordinary share capital. 2 rand is retained income, goes to retained income. But cash flow don't ask that. They say, how much did you pay? And how much did we pay for the shares? 5 rand. So the full 5 rand must go to cash flow statement, right?
Okay.
That's why I added that 36,000 to my average price of 255.
Okay, ma'am.
Okay, dear. Any other questions on this particular question before we move on? Once again, a reminder for you to complete your registers. Teachers, if you are with a group of children, please complete the register. Learners, if you have access to it, then also complete the register, please. Teachers, if you are not in the meeting, or I'll just remind them as well on our groups later. Make sure that you sign the register if you are in attendance, please. These numbers are very important for our statistics. Okay, any other questions? Okay, can we step off this one? You have a question? Okay, and I remind you again to switch off the mics and to switch off the cameras so that I'm enjoying myself here. So please don't upset us by making a noise and putting your cameras when you are not supposed to be do the cameras. Okay, I'm going to go to question number 3 for us now. Analysis and interpretations. You are provided with information relating to 2 companies. Background information, Jimmy Jagan owns 400,000 shares in each company, right? The Lange and Brand Limited. Those are your 2 companies, the Lange and Brand Limited. And the Lange the Lange Limited paid 2,160,000 to repurchase 120,000 shares. Né? Brand Limited issued 250,000 new shares only to existing shareholders at the average share price of 8 rands and 50 cents. I've noticed with this particular question that there's a mistake on the, I think, the answer book. Okay, maybe no, I'm sure. Somewhere there's a mistake. I'll mention it when I get to it. So at the average price of 8 rands 50 to expand the business. No new loans were raised, required. Where comments or explanations are required, quote financial indicators and figures to support your answer. What did I say? When you get to this question, your first mark will go to quoting the financial indicator. So you give the name of the indicator. And the second mark goes to your supporting figures, your trend. This last year it was this year is this. It increased from this point to that point or by this. 3.1, we're looking 3.1.1, comment the liquidity. What did I say? When you see the word liquidity, what jumps into your head? Current ratio, asset test ratio, debtors collection, creditors repayment, stock turnover rate, stock holding period. That's what jumps into your head on Friday. And then you go and find those ratios for the Lange. They say, quote, 2 financial indicators. 2 of them. We must find 2 of the 6 that we have. We see what we were given to those ones. So if you give 2 names of ratios, two of the figures that's given to you from this point to that point. Out of these possible 6 marks, you already have 4 marks. Then you comment on it. Liquidity, I said to you, is the ability of the business to repay their short-term debts. So you have your current assets on one side, your current liabilities. The idea is for your current assets to cover your current liabilities, right? So if you have more current assets to current liabilities, you are in a good position there. But we also don't want to have too much of it, because then we can say there's too much working capital tied up in our cash, or too much working capital tied up in stock, right? And that's also not good. Okay, we'll check now what we have. Then 3.1.2, comment on the price paid by the Langer for the repurchase or buyback of shares. I said to you, when you look at shares, there's return on shareholders' equity, there's earnings per share, dividends per share, net asset value, the market value of the shares. Those are all the things linked to your shares, right? So if you comment, you go to those things, those ratios, right? And they said, comment on the price paid. Were we given the price paid of these shares? Not directly. But they said to us, we are on the Langer. They said Langer paid 2,160,000 for 160,000 divided by 120,000. That gives you 18 rands that he was paid. Can I say it's good or bad? No. I must first go and look what is the price on the Johannesburg Stock Exchange. What is the market price? What is the net asset value? What is return? Okay, all of those things before I can comment. What's the average price in this particular business before I can say that is good or bad? Okay. Explain 2 ways in which Jimmy has benefited from the repurchase of the shares by the Langer Limited. It's either Jimmy now became the majority shareholders because those shares are back into the company. They're not out there anymore. So it will increase your shareholding basically, right? Because those shares were repurchased. But can I answer it? I have to go and look what the indicators tell me. Now let's go and find out 2 on liquidity quickly. Here is your information. And this is how they give this question on Friday. There's brand, there's the land. Your year is 2021, opening, closing, opening, closing. I said to you, the first thing we have to do, we have to look for liquidity ratios. There's a current ratio. There's an asset test ratio. There's a stock holding ratio. Number of issued shares, no. Collection, latest collection, yes. Average share price, no. Price paid, no. Price of shares, net asset value, nothing else. So we have 4 of them, right? Now they want you to say, let's read the question again. What are we answering here? Comment on the liquidity and equal to financial indicators. Yeah, they don't say you must say it's good or bad. We say quote 2 of them, right? So we can use any 2 of them. Can you see that? They say quote, comment, and then you must say it improved or decreased. So in 2020, it was 3.2 to 1 and 1.8 to 1. So your first answer is your current ratio decreased from 3.2 to 1.1. Then you have your first 2 marks there. So give yourself 1 mark for current ratio, 1 mark for the trend. Second one, asset test. You write the name first, then you give yourself 1 mark for that name. Then you will say it decreased from 1.9 to 1 to 1.2 to 1, right? And then 2 marks, right? So if that was your choice, then you take it. Stock holding period was 55 days, decreased to 40 days, right? Debtors collection was 30 days, and it increased to 36 days. Now, 36 is not so bad, right? 55, we are holding for less days stock now here. Although our ratios decrease, that's your comment now. Although your ratios decreased, you are still in a good position to repay your debts. Can you see that? So that is your comment. You will say the liquidity situation has improved or we are able to meet our current debts. Our ratios have decreased, but we are basically, I said to you earlier, we don't want ratios that are also too high. Ne? This could indicate we have a lot of cash tied up or we have a lot of stock tied up there because 3.2 is a bit high for it, right? So now it came to 1.8, so we're basically more efficient, right? So although it decreased and everything shows a decrease, but you are you are in a better position here. You don't have so much cash. Instead of having your cash lying around in the business, you can invest it in a fixed deposit or even maybe in another business that will yield better results. If you look at the stock holding period, we had stock for 55 days. Now we have 40 days, which means there's less stock money tied up in stock. Anything can happen to your stock. You can have a fire or stock is stolen, then you're losing more stock because you're having so much stock for so many days, right? So although all indicators show we are still in a position to meet our short-term debts. Okay, that's your comment that you will write. Okay, that was the first one. So remember, name first and then the trend. And then you make sure you know which ratios goes with which. Okay. The second part of it says comment on the price paid by the Langer for the repurchase or the buyback of shares. Comment on the price paid by the Langer Limited for the repurchase or buyback of shares. Now, when we started, I calculated this 18 rands for you, right? Now we must say that can be your starting point to say that the price paid was 18 rands per share, right? So let's find it quickly. And I said to you, you go and look at your net asset value. Net asset value is 13 rands and 10 cents, right? Price on the JSE, 15 rands. Price paid per share, rates even given, 18 rands, right? Average share price. So now the question is, if you look at all these indicators, was it a good thing to pay 18 rand for the shares? Then the 18 rand is then more than everything else, more than the average price, more than the market price, more than the net asset value. Basically, we pay too much for these shares. Can you see that? Okay, but these are the financial indicators that you're looking at so that you can answer that question to say whether it was paid too much or too little. So you quote these prices. You say the average price was 12 rands and 50 cents. There you get some marks, right? You say the price on the JSE was 15 rands and 20 cents. And then your comment would be the company is paying too much for the buyback of the shares, right? Okay. Then, next part. So can you see how it will help you to know how the ratios are grouped together? They are grouped like that so that when you answer a particular question, you know liquidity, these are the ones you use nothing else. Because the mistake you guys make, you don't always know which ratio goes where. So when they say liquidity, you put debt equity or you put return on shareholders equity. No, go and study your ratios and make sure you know which one goes where. There's not even much calculations in this question. All you need to know is which ratio belongs to which one. Okay. Then explain two ways in which Jimmy has. Oh,
Sorry to interrupt. There's someone removing us from the meeting.
is it not because your camera is on, dear?
No, my camera is not on.
Okay, but luckily you're still on in the meeting, eh? Because the only people who would remove you is people who you are making a noise or your cameras are on or something like that. Okay. Switch off your mic now again and then we continue. Explain two ways in which Jimmy has benefited from the repurchase of the share by the Langer Limited. You can have Jimmy has become the majority shareholders. Now, how do we know that Jimmy has become the majority shareholders? Let's see. The Langer Limited repurchased 120,000 shares. No? Find it quickly if you can see the shares. Total dividends. Oh, there it is.